So now we'll discuss about the process flow or flow of loan syndication market, how the exactly loan works in syndication market. If I give the example, let's say there is one private equity fund, GMT private equity fund, PE fund is interested in buying the loans, right? GMT PE fund interested in buying loans of 10 million, right? Here, then GMT fund manager will reach out to the LMA market if the GMT fund want to make trade in UK market, or else LSTA market. So here you would see, let's say fund managers from Blackstone they'll also reach, fund manager here. If GMT fund is buyer for a 10 million, so you might see Blackstone is looking for a sell of 10 million, right? Interest rate, let's assume interest rate is 5%, so 10 million at interest rate is 10%. I am assuming 10% interest rate, right? Same here, let's say buyer is also looking for a same, buyer has appetite 10% interest for per annum. So that's how they can submit their requirement to the LSTA. And here trading desk of LSTA and LMA, they ensure buyers and sellers requirement. If the buyers and sellers requirement order match, it's OTC market, okay, but still you would see order details and all. Order match. If the details or order match, then this information, it will be passed on the market or clear power, or maybe let's say Loan IQ platform. These are the platforms or clearing agents who maintain the data for their clients. And then here again GMT funds middle office team, after the execution of the trades in LSTA and LMA market, and then Blackstone's middle office team, they come into picture. They access the clear power and market, check the trade ticket created by this unique system, trading system, settlement system, and then they initiate their documentation process. So in first episode we have covered about the different documents that comes into picture, or we signed, or the fund or different funds or institutions, they sign different documents, and here we have discussed about the process flow. So it means here the entire documents that you can sign, review, verify, modify, all the documents on a loan exchange clearing platform, right? So here that platform maintain all the important required documents about funding, pricing letter, assignment agreement, trade confirmation, trade ticket, everything means everything. So what you need to do, you need to refer the documents, sign it, review it, and reach out to the counterpart. So when you say counterpart, it means GMT fund would be the counterpart again of Blackstone. Blackstone is a seller, so he's a seller. So that's what. And see on a document also, what would be the terms of the 10% interest, the 10 million would be the principal amount, 10% would be the interest payments. So then the repayment of interest payment, when it will be repayment and all, or maybe this particular counterparty can sell the loans in the market and all. So that depends on their investment decisions, depends on their investment strategies and all. So it will be signed and executed. But yes, so this is how you would see the role of LMA and LSTA markets here. Actually loan trades, and then after the LSTA and LMA, they transfer the data to the market or ClearPar, where the buyer and seller, they again access the ClearPar site and portal where they check their trade tickets, the other important documents and all, and then finally they execute the deals. So at the time of means pricing later, when they signed, then again the other final counterpart that is come into picture, which is custodian and agent bank. Agent bank issue the funding in custodian that need all the documents where they keep with them, or maybe sometime you would see trustee as well, where trustee come into picture, and trustee maintain the accounting records for transactions, whatever transactions that happened. So they maintain the data and provide that information to the stakeholder, investor, or the other counterparts who are looking for that information. So this is how you would see the flow of loans in the market. Okay, so I'm sure now you got the clear idea about this as well, how this flow works. Okay, I'll take you ahead and see. I have few important examples or slides that I want to walk you through. So let's see. So through this example also, you would see the same customer send the request to the bank, and then bank reach out to the other partners or institutions, other partners and institutions. If you see financial institutions, if I take the example of same HDFC, Axis, GP, BNY, BNP. Let's say this customer need 1 lakh loan. If the in the first place, customer will reach out to the BNP only, not the other banks. Then BNP in a two way. See BNP, Sumitomo. You can take the same name. Sumitomo Bank. So we'll have two options. One, bank can manage the funds and directly transfer 1 lakh, or else to diversify or reduce the risk, bank can ask or approach to the other banks in their syndicated group, or because every bank they come together. They join the syndicated groups and all, and here the best platform for them is like LSTA and LMA markets. So they are the platforms where they help each other to mitigate their business objectives and all through their different funding strategies. And this is one of the big strategy, I would say, right? Then here if you see, if the other banks agreed, of course this bank will work in two ways. As I said, bank can provide funding, else bank can partially manage the funds, let's say 50,000, or else only bank can arrange it, but bank will not fund. Means banks always see in this particular investment business, it's a customized investment business. It's not mandated that this bank should provide funding to the customer, right? So this bank only can work as an arranger or broker or executing broker, I would say. Bank don't want to contribute, bank just want to execute and help both the counterparts, buyer and seller. This customer would be buyer here, buyer of the loan, and all the other, like these are the seller of the loans. Seller will work as a lender, buyer will work as a borrower. Borrower will pay the principal and interest payment always, and here loan syndication group institutions will receive principal plus interest. And here the one means Sumitomo Bank initiate the agreements. Here if you see commitment line agreement, so they enter into loan agreement or commitment line agreement. So let's say HDFC decided to pay 30,000, Axis 5, JPM 5 and BNY let's say 10,000. So here first lien it means rights will receive to the Sumitomo Bank in case of default event. Second right to the HDFC Bank, and then third would be here to the BNY. Third lien. Fourth, so it's equal contribution from JPM and Axis, so it will receive to both. So this is how in the actual market, so that particular loans works and executed in the market. So it means this customer can reach out in LSTA market, then LSTA market here the Sumitomo Bank or their advisors, they also reach in to the same place, and they find or they can meet each other and then discuss the further terms. So this is how your loan agreement executed in marketplace. So I hope now you got this idea how loan syndication works. I have one more slide that I'll walk you through and then see. If you have in case of any questions, you can text me, that's absolutely fine. Right, so how exactly the loan works in a syndication process. So I have this example again in the same line so that you can relate. Let's say if I take the another example here to explain the same thing. Let's assume it TCS want 1 lakh, same example. TCS is looking for a funding, right? TCS reach out to the, let's say HDFC for a loan. HDFC deny to pay entire loan. Then HDFC reach out to the LMA market, primary loan market. Let's assume it LMA market. Then banks from the LMA market, let's say Axis, HDFC, HSBC, JP, BNY, BNP, or let's say any other institute, NT, Northern Trust. So these are the institutions. Let's say HDFC said like, so they are okay with 50%, means 50,000. They are ready to pay to their to the TCS, but again they are looking for other participants or other syndic body who can contribute. Then let's say Axis deny it. Axis don't want to enter into this agreement, might be due to interest payment and all. NT again back out, they don't want it. BNP again back out, they don't want to continue with this loan process. Let's say BNY is agreed with 30,000, JPM is agreed with 10 and HSBC is agreed with 10. Then see, this book runner bank will execute the agreement with participants. All participants, they don't need to sign any agreement with TCS. TCS will sign the main agreement with HDFC, and then HDFC will sign the other agreements with HSBC, JPM, BNY, and this bank, HDFC Bank, will maintain the records for all, even for a TCS and even for HSBC, JPM, BNY as well. So this is how that particular loans works. If you see, let's assume it. So the interest rate was 10% for per annum, and again, primary market, it means that LSTA and LMA, but I would say it's not something primary, but that executed already, they discussed and executed. So secondary market would be your LMA and LSTA. This market you can call it as exactly that secondary market, LMA LSTA, market, LMA and LSTA market. Here the funds like let's say Blackstone, PIMCO, then GS Fund, ICICI Direct. These are the funds, right? Let's say ABC Fund, ABC Fund. These are the funds. Let's say after 3 months or 4 months, after 4 months, all these participants they don't want to continue with this agreement, right? They don't want to continue. Let's say this main duration is 10 years, and now all this means primary holder of the loans, they don't want to continue with this loan, but they cannot ask TCS to repay their loans, but they can participate in the LMA and LSTA market, and they can look for a buyer of the loan. So it means they will be the seller, and if the same Blackstone and all, they agree with the 10% with the whatever component and principal, if you see, then Blackstone, PIMCO, GS, they'll purchase the loans through the LMA and LSTA market, and then HSBC and the JPM and other institution or even SDFC, they'll be the seller here. They'll sell the loans in the market and they'll take the exit. So this is how there would be one executed party or broker, so that they'll ensure it. So throughout this duration, 10-year duration, this loan syndication or loan process will be transparently managed and books of record transparently managed and all. So that will be ensured. So this is how your loan market works, guys. And that's what here you would see, means most of the, if you join any private equity and hedge fund, if you see, they participate in loan market and they purchase the loans frequently, and those loans or those funds, you can call it as a closed-end funds, just because of it's just because of the nature of the loan should be illiquid, so you cannot easily liquidate, you cannot easily buy and sell it, so it's required lot of documentation process and all. So those loans you can call it as illiquid loans, and most of the closed-end funds from a hedge fund and private equity, they participate in loan syndication business, and they work and they manage the transactions. And from a processing perspective, middle office people, they take care of the documentation part, settlement part, trade capture part, all the signings and all, and back office people, they actually maintain the books of record. So they ensure whatever the status of the loan is, they ensure it is recorded in the books of fund, and they record under different funds. So this is how it means, the back office and middle office teams works, and the different the parties also come into picture and all. Okay, so I'm done with this structure as well. So syndication structure, if you have any question as such, you can text me. You can text me, or you can directly book the appointments, or you can book the personal sessions also if you need any personal guidance with your queries and all. Okay. And in a process, if you see, so how this particular loan, process that executed in the corporate. So if you ask me, I'll explain that as well. So this is the example where, if you see, so same example, let's say this particular deal like Starwood Hotels and Resort need a 250 million term loan for 2 years, and they already signed. Purpose, let's say general, whatever it would be. The interest rate would be the LIBOR. No, we don't have a LIBOR now. It's now SONAR, SOFR. So there are different rates. But just take example. Let's say total price and all, it goes around LIBOR plus 125 BPS. So this is the rate, if you see. But the role of the different institutions, if you see, mandated arranger, it means DB would be the main who will arrange the loan, mandated to originate the structure and syndicate the transaction. So DB will initiate the transaction. Book runner, again DB will maintain, issues invitation to the participant in the syndication, disseminates information to the banks and inform the borrower about the progress of the syndication, and other participants with the DB. Here if you see exactly the other participants like credit, line is Citibank, Bank One, DB and UBS. They have participated in the providing funding to the borrower. And then there would be again administrative agent as well who maintain the admin records, title given to the arranger of a syndicated loan and transaction in the US market. So this is how loan executed in the loan syndication market. Same flow chart or mapping that you would see in your agreement. So who are the different participants, how they'll play the roles and all, what would be the responsibilities and all. So everything will be defined in the agreements, and agreements looks like this, right? So I hope now you got the idea how this process works exactly in the real world as well. And the important is here there are two types of agreements. One is assignment agreement. Assignment means so where borrower will sign the agreement with lender as well as the lender of the records. Payments means there would be, let's say, who is going to maintain the records, lender records. Borrower can sign the agreements with these two, right? Assigner can be different and assignee can be also different. Or in short, I would say it's a new loan. Or directly can sign the agreement with both the counterparts. But with the participation loan, it's a right. So there are different types. Means in within every instrument you would see different types. So in the loan market you would see two different types. One is assignment and another one is participation rights. And participation right, it means here, so that particular counterparts who are the participants, like the previous example if you see. So here they are the participants, right? Participants means DB, bank, CT and all. So all other participants, they hold the rights. They hold the rights of elevation something. So they hold the rights of elevation. So it means participants, they hold the rights. So that loan we call it as a participation loan. And here, so you would see only one lender will sign the agreements with the borrower and other participants will sign the agreements with lender, and the other participants, they'll hold the rights, participation rights, whether let's say duration is 3 months. After 3 months, if these participants want to continue or not, so they'll hold the rights, voting rights, payment on a loan, certain voting rights on a loan. So they hold the payment or participation rights. So those loans we can call it as a participation loan. So here probably it would be existing loans where they hold the participation rights, and when they hold the participation rights and if they want to continue with the loans, then that process we call it as a elevation. Elevation, it means the participants want to continue with the loans. That process we call it as a elevation. So you would see that practical terms as well. And here assignment, it means it's a new loan that you can say borrower will sign the contract with both. Okay, so this is how process flow works in loan syndication. Again, another one example that I would like to discuss quickly and then I'll wrap up. So how the loan, this particular how the loan works in market. So this is one example. If you see process flow, first of all you need to set up the loans on your system, then you need to set up again instructions as well, account, wire, everything, then allocation of that particular deal or loans, you need to allocate that to the particular counterparts. Then trade booking, that you need to do in your internal system. So allocation, it means it would be on a clearing agent platform like ClearPower, Euroclear and all. There you need to allocate and sign the documents as per the allocation. I'll explain that process not now, but maybe in any other video. See, it's require 4 to 5 sessions to discuss each and everything in details. It's not something that we can finish it out in one session. But still, I just wanted to walk you through how it works and all. That's what we are covering this. And then loan servicing, it means other reconciliation and all that parts come into picture. T0, it means that provides you the confirmation, T10 provides you the settlement, and T12, so it means a recon and all that you can perform and confirm. And after the settlement, you would see trade booking and confirmation. After that, break resolution and all, you need to work on that part as well. In a recon, you can capture all the break resolutions and then provide the I would say resolution and all to the pending transactions also. So in that way we work here, and you would see this would be a process flow of a loan platform or loan process, loan syndication process. If you need any clarification or if you're looking for any course, you can enroll for our courses, okay, where we cover in detail. Yes, so this was about, overview of, or I would say brief about the loan syndication, what are the documents, how it works, loan syndication and all. So here you can find opportunities. Companies like Citco, Apex, NT, BNY, FIS, they have a syndication product. They have a syndicated, businesses, loan syndication businesses. They hired, and even people like the who are working with syndication, they enjoy the work-life balance as well. So it means it's not something critical and difficult process. It's a very easy. Anyone can do it. So you can join loan syndication process if you are interested, guys. Okay. And if you need any training or specific course on loan syndication, then you can enroll for our courses. We have a customized course program for a loan syndication where we provide material as well as we provide practical examples, like how we calculate the delayed compensation, cost of carry, pay down, principal pay down, draw down, right? How the restructuring happened in the loan syndication market. What is restructuring? What are the platforms that the most of the institutions they have for a loan syndication business? How it works? So we cover all of that in our course. If you are interested, then I would say just enroll for courses and enjoy that content. That would be live course, not the recorded one, of course. But yes, if you like this video, then I would say just transfer and share with others. Let them also learn it. And if you are looking for any courses as such, then you can reach out to us directly. We are offering certified investment banking course which covers the practical aspect. The institutions like others who charge 2 lakhs, 3 lakhs, you don't require that. What you require training, you require guidance. That's it. With that, you can grab the offer anywhere. So don't get trapped by paying 2 lakhs and 3 lakhs loan amount for courses. That doesn't make any sense at all. Right? That will take, even though means once you get a job, you will not earn 2 to 3 lakhs easily. That will take 2 to 3 years. So don't get trapped. So if you're looking for any guidance, always you can call us and text us on WhatsApp if you want. So we'll see you in next session. Thank you for your support. We'll see you.